Well, hello and welcome to this YouTube weekly update. So we saw a very nice bounce in the market. 1, 2, 3 up days. We measured the high and the low of the first trading day of the month, which was the 2nd of May. We've now broken above that level and we are moving up. Now, exactly what I showed you last week with the TRIN. Now, remember the TRIN was trading at 2, where I said that when you see a reading of 2 or higher on the TRIN, that shows that the market is oversold, right? And you are likely to see over the next 1 to 3 days a move higher. This move higher occurs 90% of the time when you see a TRIN reading of 2 or higher. TRIN is the most accurate overbought, oversold reading in the stock market. Okay, now RSI can remain overbought or oversold for a significant period of time, but not the TRIN. The TRIN is something that really accurately measures overbought, oversold in the stock market. When you see that the TRIN is over 2, then you are likely to see 90% of the time a move higher over the next 1 to 3 days. That's exactly what I said last week. And what did we do? Well, we set up a vertical spread trade with that TRIN reading in mind. A 90% probability trade, I'm taking that trade every day of the week. So we set up a high probability vertical spread. We made a 39% return on our money in 4 days. $105 profit per contract. Members that had 10 to 20 contracts on this made over $1,000 to $2,000 in 4 days. Beautiful thing, right? So that was one of the things that we did. Now, what I also want to talk to you guys about is, yes, we've got a bullish opening range mode there, but the TRIN right now with a reading of 0.5 shows that it's overbought, and we're likely to see a flat to down day, right, in today's price action. When we look at the SPX put call ratio, something below 1.75 is bearish. So this is a bearish sign. The skew, the perceived risk of a market crash, when it's above 135, that is likely a market crash. Right now it's trading at 127.75, so that's showing the smart money is not worried about a market crash right now. Again, that could change. Combined put call ratio, the 10-day moving average is at 1.16. That is a bullish sign. Okay, that's a bullish sign there. So we are getting some conflicting signals between bullish and bearish right now. Yes, we have had a nice bounce, and the Federal Reserve come out with their 0.5% interest rate rise, which that was already priced in, right? Everyone knew that. And they said some calming words, and what happens? The market goes up. Does that mean that we're just going to continue to go up? No, we could very easily turn around and start selling off again. It wouldn't take much at all. So all I'm looking for right now in order to make money, yes, we made some money with that SPY vertical trade based on the TRIN, 90% probability trade. But what I'm looking for now is really beaten up stocks that are massively undervalued that I can buy at an even more of a discounted price. Let me show you some examples of that. So one of them that you've no doubt heard about is Netflix having a 40% drop on earnings. Okay, so right now trading at $204, severely oversold. $204 right now. So what I would do here with Netflix, again, the Warren Buffett trade, right, it was down 41% on earnings, but be fearful when others are greedy and greedy when others are fearful. And right now, people are fearful with Netflix. I would like to buy the stock. John, that sounds a bit crazy. Why would you want to buy the stock when it just dropped 41%? Because it's at a ridiculously low price. It's massively undervalued. I have a calculation that I do. It takes me a little while, but it actually gives me the real or intrinsic value of the stock, the minimum value of what the stock is likely to be. So, or what it is. Now, eventually, the price and the intrinsic or real value will meet. Okay, so in this case, the real value is $311.87 as of today. And with the stock at $204.01, it's undervalued. At some point, the price will come up to meet the real or intrinsic value. So what I'm going to do is I'm going to be very conservative here, and I'm going to agree to buy Netflix down at 170, right? All the way down here at 170. Okay, so I'm going to agree to buy Netflix at 170. It might be a bit easier if I put it on this chart. Netflix at 170. So I'm going to agree to buy it down here at 170. Okay. Now, for me, I'm going to receive $390 for every 100 shares I agree to buy for the next 43 days, expiry the 17th of June. That's a 2% return on my money, and I'm looking to buy a stock, if I do own it, How do you own it, Sean? If it finishes below 170 come the 17th of June. If it does, I'll buy the stock. That's what I wanted to do anyway. If I do end up owning it, I'll own it for a cost basis of $166.10 with a real or intrinsic value of $311.87. That's a no-brainer, right? So I'm going to set that trade up now. Now, another one that I like is MicroStrategy. Now, MicroStrategy's real or intrinsic value is $471.17. Now, right now, let's just have a quick look here at MicroStrategy. Now, if you look at MicroStrategy, yes, it looks like it's found a level of support here around 300-ish. Remember, support is a zone, not a specific price. Now, but with the price at 366, if you looked at all the Bitcoin that MicroStrategy owns, right, over 120,000 Bitcoin, just looking at its Bitcoin value that it has, the value of the Bitcoin that it holds as a company, it's 26% undervalued. So the price right now is 26% undervalued. That doesn't make any sense, right? So for me, again, this is a no-brainer. Forget about its software business, just the Bitcoin that it owns. It is 26% undervalued as a stock. So with that in mind, what I'm going to do here with MicroStrategy is I'm going to agree to buy it down at 300. Trading at 366 right now. Okay, it's trading at 366 right now. I'm going to agree to buy it down at 300. So a significant discount from where it is. For that, for agreeing to buy 100 shares at 300, I'm going to receive $1,675 today. For the next 43 days, if it does remain above 300, which is $66 above that now, I'll receive a 6% return on my money. Now, if I do own the stock, if it finishes below 300 come the 17th of June, I will then own the stock. Okay, I will then own the stock and I will buy the stock at a cost basis of $283.25. Okay, so I like the look of that. If I can buy the stock at $283.25 with a real intrinsic value of $471.17, happy days, right? So I like that trade. Bit of a no-brainer for me. I'm going to go ahead and do that one. Another one is Facebook, Meta. Now, we know it's been hammered recently. Just about everything has moved down recently. You name it, it's gone down. Right? There's a lot of fear in the market right now, and Facebook has a pristine balance sheet. Okay, I do like the look of Facebook. Huge amount of cash, and people are starting to realize that it's undervalued, and it's starting to move up already. So up over 5% just last night. So what I would say with this one, with a real value, according to my calculations, of $258.63, I'm going to agree to buy it down at $190. $308 of premium per contract. If it finishes above $190 come the 17th of June, I keep the money, don't buy the stock. If it finishes below $190, I still keep the money, and now I buy the stock with a cost basis of $186.92. With a real value of $253.63. So I like the look of that as well. So there are three trades that we're looking to get into this week. We will see what the market gives us. Very volatile right now. Big moves up, big moves down. Don't count out just because of the fact that it's had a move up that it can't turn around and start selling off again. Okay, just be mindful of that. So we're being very defensive, very particular with the trades we're taking, and there's some of the positions that we are into right now. Okay, guys, hope you found that useful. Talk to you again next week. All the best, and bye for now.